Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, Mitch Hotch with you this morning. Relatively quiet morning, as you would expect on a New Year's Eve day. With some stocks are up, some stocks are down, but not a lot in the way of macro headlines or individual movers. So we're going to talk just overall sentiment here and just reading the tape from yesterday and what that could mean for stocks after, how they could trade after the new year. We'll also talk tech, Tesla and Apple, and more with our guest, Gene Munster, one of our favorites. He is, of course, the managing partner at Loup Ventures, does amazing research on emerging technology. That'll be at 8:35, so super excited for that. Want to remind you all, again, to hit that like button. It takes a split second, and it's a way to show us some love on YouTube, so we appreciate that. Joel, what's the word here in the overnight session? It's relatively quiet, like I mentioned, yeah?
Yeah, sure is, Spencer. Another buy the dip opportunity. Flat open. Tried to get to yesterday's low. No can do. We stopped at 1650 and rallied as high as 38 and a quarter. And we've just kind of been hanging up there. That all-time high made yesterday in overnight at 47.75. All-time closing high. We're right around there, folks. That is 27.50 is your all-time closing high. So we'll keep an eye on that today. Crude just kind of stuck in a 48 handle, up 44 cents, 48.44. Let's call it gold flat on the session here at 18.83. Silver, that's up 23 cents, been performing a little bit better at 26.44 and a half. And Bitcoin, I think the cash got real close to 30. Futures turned back at 28,885. That's up $1,000.20 or 3.75%. So Bitcoin ending the year on a strong note.
Can we get to 30,000 by the end of the year? Is it possible? That's tomorrow.
We'll probably
night.
do it
Tomorrow night.
New Year's Day.
Yeah, you're probably right there over the holiday.
Everyone's be like, drinking a champagne.
Let's buy some Bitcoin. Yeah, let's jack that thing up a little bit here. Yeah, hey, look at that. 30,000. Yay, sparklies.
How about our Bitcoin?
Million bubbles in the champagne, apparently.
Yeah,
sorry.
That's okay.
Did you see that fact on CNBC? I'll steal their content right now.
Do it.
The question was an hour ago, how many bubbles are in a glass of champagne? I just said it, but I saw I ruined it already.
I don't know.
It was way more than I thought. It was 1 million bubbles in a glass of champagne.
I just guessed that, and I didn't hear
you
say.
Million. I would have guessed like 1,000, 1 million. Whoa, that's a lot of bubbles.
In a glass?
That's what I said, in a glass. Yeah, in a bottle. I googled it too. It's like 47 million in a bottle. Now that's an estimate. Nobody sat there counting up to 47 million, but it's crazy. It's a lot of carbonation right there.
All right, let's talk stocks.
Let's talk tangent. Let's bring us back.
I know, man. 2 days in a row, champagne's mentioned on the show. When it's that time of the year. Stocks. What stocks do we want?
Baba's the only thing moving. Alibaba. Apparently, I guess I did sell the low. Sold half, didn't know what to do. Just never sell the dip. That's the moral of the story. Anyway, you always get a rip back up, and here it would have been. I'm still nervous. I'm not kidding you. I'm still nervous about this position because I still don't think we're out of the woods, but holy mackerel, I should have just held on to all of it. And obviously, I could have been selling half now and been 20 points better because I sold down 223 and it's 243. So never sell the dip. The moral of the story, even when you think the companies are being attacked by the Chinese government, it's still just a buying opportunity.
What page is that going to be in the book?
No, the cover.
Give us news.
Buy the dip. Page 1, never sell the dip. Page 2, sell the rip.
Spencer,
we got like 5 words on each page. So
the Alibaba news, there's just more headlines, reports about what Jack Ma and the Chinese government may or may not do. There's a report that the government could take a greater control of AIM's financial. But again, these are all just reports. Nothing actually concrete coming out of China. All just they may do this, they may do that.
The line in the sand, barring any headlines, I'm going to say is 252. Draw that line, Joel. Draw that straight line.
I will.
If we get back up to there, you're 9 points away from it. If you're coming and buying Alibaba now you are late to the party, in my opinion. You know, obviously, I was of the impression that it could continue to go lower. Obviously wrong. Got down to 211. But if you come and buy at 243, I mean, now it's like, okay, I think you're going to get another dip here eventually to reload. So if you are so inclined to be in. So, but I've been wrong on Baba. I was nervous and I thought it could continue to go lower, and obviously that was a buying opportunity. So maybe I don't want to follow what I think about it, but I think 250. If you're buying that dip, it gets back up to 250. I think you lock it in.
For the actual true gap fill, you know, I've seen this thing do it on more than one occasion. You need to get to 52, 53. That was the low on the 23rd. High on the 24th was 29.90. It did set up technically well yesterday when it held the previous day's high, and then boom, there, or not the fallout day high. So you're gapping into a gap area. Let's see what happens. Pre-market high is 45. So you got to get back over 45 to get a shot at that area. But just, you know, nice little rally, gap into a gap area. Really not much change in the news there. But Baba, definitely a good day yesterday.
Next.
Jan, Gan, Fan.
Yeah,
Han,
let's do
Man.
it. Okay, so apparently, and I don't know anything about JAN. I know zero about this stock. First time I've ever even, seen it, I think. Apparently last night there was it Niles who was on CNBC? Somebody was on CNBC.
It was Dan Niles.
Yeah, and the host was saying, "Oh, you have this new position in Jan," and they meant I didn't see this part, but this is apparently what they're saying on Twitter. They said Jan and not Gan. So the market thinks it's JAN. Meanwhile, it was actually GAN. So they confuse the soft G with the hard G. I know because I'm teaching my 6-year-old how to read, and we're doing the homeschooling there. And you got the soft G and you got the hard G. A hard G is golf. A soft G would be like, for you stock traders out there, generic. So anyways, they obviously confused the hard G and the soft G, and they said called Jan, and that's why Jan is running. At least that's what they're saying. That's why it's running. I don't see any other news on JAN, so I cannot confirm if that is why it's running or it's not it's running. I'm just saying that's what they're saying on Twitter, that JAN is basically up 38% here this morning on mistaken identity. I have no idea if that's true or not.
Okay, so the Jan move is dumb, but the GAN move is also dumb because I guess he was on TV to talk about it, but he had a blog post up 2 days.
We knew it.
No, I guess it was yesterday. My mistake. I guess it was yesterday. Just his top picks for the year, right?
Yeah.
He talked about JP Morgan, XLE, Oracle, MGA, Mary Golf Alpha, and GAN. Those are his top 5 picks for the year. So of course everyone's just gonna piggyback on GAN. Why? I don't know.
Because it's a name that a lot of retail traders flock to, and it's like, then people want the smaller, tech name to, potentially, make some quick money. People are into making the money fast. So GAN's hardly up. It's only up 3% here this morning. It's Jan that's getting all the love because somebody mispronounced the name. So I have no idea. It's up 39% here, but people are saying, oh, this is an easy short. Who the hell knows? I mean, these things, once Robinhood grabs a hold of it, here you got, somebody saying, oh, okay, well, it's the wrong name. I'm still up 40% in it, so it's working. So I guess I just go with it. It's stupid. If this is really the reason it's showing how dumb this market really is. But I'm not coming in here and shorting it because I've seen stocks go from thin little stocks like this, go from 5 to 7, could continue to go higher. If I was long it, I would sell the hell out of it. But I'm not shorting. I don't even know if you can get a borrow on this thing. I could go look at that right now. But Joel, what would you do if you were in Jan or GAN I guess it's Jan. Would you be buying or selling? It's no good. I can't get a locate.
Okay. All right. So then it's not even, I mean, I'd probably be short at 6.
Well, yeah, probably. Like, oh, they mistaken this thing. I'm selling this short 6 and now it's 7. You're like, are they going to figure it out? Please figure it out, market. This is the wrong stock. It can continue. Mistaken identity can continue for a while. And we've seen this lots of times. This is why they had to delist ZOOM. They literally delisted ZOOM, the other company, because everybody thought it was Zoom Communications. They thought it was ZM. So, I mean, this is how silly this market can be. The regulators come in and delist it just to protect the people who get confused, the dumb money. So,
dumb money. So I'll just talk GAN here, and
Well,
you know,
before you break it down,
Sure.
I just want to give you some add some background information.
Color. We love color.
On the 21st, they closed an upsized public offering of 7 million shares, pretty much at $15.50 a share. I think that's caused a little bit of the spike, then caused a little bit of the pullback, and then now you're getting some bigger bulls jumping into this. So, full disclosure, I'm in GAN. I got in it a little bit back in the 16 to 17 area.
Nice.
So I'll definitely keep watching this one. But I think, that offering definitely played an effect.
Can someone explain to me why an offering is good? Like, they're raising money, but why does that mean the stock should go up? I don't understand that.
They'll interpret it. It really theoretically shouldn't be good, but they'll interpret, they're, getting some investing money for growth. So like I said, you can do 2 offerings. One is to grow the company and the other is to survive the company. So maybe they're interpreting this is to grow the company. This is good. We're getting some money. It's going to continue to lever this up and, we'll expand this business and get it going. I mean, that's the reason behind it. The other offerings, like we saw back in the day when U.S. Steel was in big trouble, or RCL or CCL or any of the airlines, those are offerings to survive. So those typically are not good because they're dilutive. Obviously, all offerings are dilutive, but really textbook, they're all dilutive. So really none of them are good for the bottom line, in my opinion, unless they're really going to do something well with the money. So I guess if they're going to do better with the money than the dilution factor, then I guess it's good.
just a quick technical on GAN. It's stuck its head above $20 a couple times here since October. So that's a big area to me. 2048 was the one high, and then 3 days ago, I guess that would be on last Thursday, you got up in that quadrant 2, and that was 2060. So that's a big bogey, and if it gets there and holds up there, it doesn't necessarily have to take it out today, but maybe get up. And you got to start finding some support here at 2010, 2005. Build a little base and then get the momentum to take out those highs. But just the 2 times that it came up there and then came back down, I think that's a good area today. You haven't hit it yet in the pre-market or after hours session. And I will put the chart up, guys. I'm sorry. There you go.
Charts.
There's the chart. Chart.
Moving on from the GAN, let's move on to the SPACs, because they were really under attack there yesterday. I mean, money has been hiding and flying into this sector, into all of these, I guess not a sector, into the SPACs. And some of that was coming out yesterday. And I mean, you probably can talk to this, Mitch, if you're still there. You guys covered on SPAC attack. Why the sell-off yesterday?
There's waves to this game. I always talk about it in our SPAC attack show. There's going to be waves. Just kind of like if you look at a different industry, like look at EV, you'll see waves where it goes up and then takes these big pullbacks. One of the things in this market is we have high volatility. So you're going to have those high swings. That's why I think we always remind people, if you're buying the rips in this market, it's going to be tough to make a profit. We try to remind you guys. And that's what we're keeping an eye out. So I think we got a little bit of a down wave where investors will try to get in at good pricing. And what we'll do in this area is try to look for the new SPACs, really give the information to get you guys some informed trades.
Do you got a couple that you guys were eyeing up yesterday on the pullbacks? Because obviously we like buying dips on this show. We know that. And you guys are the SPACs. You do a lot of homework there. We know Chris does obviously as well. What's on your radar there?
Well, I'll tell you what, today is one of the best shows I think we're going to have of the year. It's a
Okay.
show that is strictly for SPACs that are at $10 and $11.
I like that.
So I definitely
I'm gonna listen to
check it
that.
out today at 11 o'clock.
So 10 o'clock or at 11 o'clock, we're going to talk the $10 SPACs. I mean, I have a whole portfolio of these things. So the reason I've given before is that I think, when these things come out, and obviously I've talked to SBAC, I've talked to a lot of them. I'm still holding on to all of them because I'm waiting around for a deal. But there is probably 100 of these things sitting around the $10, and they're searching for
100?
companies.
Really? There's that many? Huh?
There's maybe more than that, Joel. How many, Mitch, do you think
Whew.
are just sitting there looking for a deal? It's probably more than 100. It's probably a couple
I
hundred.
think, yeah, you're
Might be
near that.
200.
You're near that level. And one of the things is that, let's just say like the last 3 weeks, we've had like over 50 come out in like the last 3 weeks. So you can just
Everybody's
imagine.
just coming out with this back. So, and some of these have run. I mean, some of these have run without deals. So, which is kind of weird too. When one of these SPACs is running up 5-10%, it doesn't even have a deal. A lot of them haven't though. So I'm playing the ones that haven't gone, and all I'm saying is, look, typically these things don't trade much under 10. They may stocks can do anything. They can go anywhere. So can SPACs. But from history, from what I'm seeing here, at least in recent history this year, most of these SPACs tend to hold the 10. There's a mouthful very well. And then when they announce a deal, they get the pop. And we have one today, Spencer. We had one. I don't know if you have the details on the symbol, but I saw that we had a deal this morning. And this is just the example. Do you have it?
The fintech acquisition, FTIV.
Yeah, FTIV.
FTIV is the SPAC ticker. They're buying Perello Weinberg, which is just like an advisory firm, right?
Yeah.
A business advisory firm, which I don't know, like on the
not that exciting.
No, on the spectrum of like sexy businesses, that's not near the top.
So here you go. Here's one that does a deal. It's not even that exciting, and it still goes from $10.80 to $13 overnight. So if you were, up earlier this morning at 13, you're still getting 11.70. It's bid 11.70 right now, even if you just bought it. So this is like, I'm looking at this thing trading around 10.20 forever and ever. Started drifting up here a little bit. Maybe people getting a hint that they're going to get a deal, and then they get a deal. So I think the way I'm playing these is I'm waiting for the deal. They announce a deal, I'm going to turn around and try to sell the pop. Maybe I'm going to get burned, but I've diversified. I'm not all in on just one. I got a whole bunch of these things. And if it's a bad deal, maybe it's going to go down, but we don't have a lot of precedence for these stocks dumping on bad deals. So at least initially. So that's how I'm playing a lot of these SPACs. Obviously everything's all about diversification. I'm not going on margin. I'm not putting all my money into all SPACs, but I've got about 12 or 15 of these that are all sitting around 10, and I'm waiting for deals. So, and I'm picking the ones I'm cherry picking the good ones. We know I'm in PSTH, which I'm way up in. That's now trading at a premium. That's Bill Ackman's. But, I've picked on Starboard, which I've already talked about, SVAC. I've also picked on, there's a couple from, and, you can just cherry pick, obviously, the management teams that you're confident in. But there's also a couple from Apollo, and I think Apollo is pretty smart people over there too. APSG is one of them. They have another one as well. I was picking this up around 10.25. It's up at 10.75 now, so maybe you wait till it pulls back. It seems like these things come back in, get you down the 10.30, 10.40 range. But I mean, Apollo's pretty smart people there, Joel. You think about Apollo, the hedge fund. They do.
Yeah, they've been doing deals. Yeah.
Yeah. So I'm like, I'll bet on Apollo. I'll bet on the management teams. I'll bet on Bill Ackman. I'll bet on Starboard. That's all I'm doing. I'm cherry picking the good management teams.
What's the Apollo symbol?
APSG. There's a couple of them though. I had them all written down, but I don't have it in front of me, of course. And we're not SPAC Attack, so we don't take all their material. But I'm just saying how I'm approaching it is, I'm picking on the good management teams, the management teams that I'm comfortable in. Apollo, Starboard, Bill Ackman. I'm comfortable with those.
Yeah, I mean, I think it'll be interesting when these, companies, after they get out of the, they do the acquisition and then they're a real company, and then they start reporting earnings. I know you don't. I know you're playing it you're playing it to get in and out before that, but it'll be interesting to see how these issues or these companies perform. But there's a lot of them out there. It's definitely really caught. I mean, IPOs, there's been some big IPOs, but man, this SPACs are coming out. You know what?
So continuing on.
That we should mention LCA, which Dennis, I believe you still own, is
Yeah, I
now
do.
Golden Nugget. So that's GN.
I listened to SPAC Attack the other day, and they talked me into selling half of it. So Chris was on there, and he says I'd be ringing the register on this. It was around 26 when he was saying that. So props to Chris Catchy there, because it's obviously come off a little bit. It's 24.76. I don't want to sell it all. I still like the story, but I did sell half. And I talked about it yesterday, thinking maybe I'm going to sell half. Because I've got a double on this. I bought this thing at 13 to 26 is basically, obviously, that's a double. I think I bought 13 and change. So I think I was up like 95% or something. So I booked half the gain, 26.10 I sold yesterday in the pre-market. So yeah. So anyways, I did GNOG. It's GNOG now, obviously. LCA. So becomes GNOG. I still like the story, Gold Nugget Online Gaming. I think the story continues why I didn't sell at all. But now I'm playing completely with the house's money. I like owning a casino stock, playing with the house's money.
All right, 8:21. We're going to have Gene Munster on in about 15 minutes to talk tech. He'll talk Apple. He'll talk Tesla. We'll take some questions from our chat. In the meantime, let's talk. Dennis, did you trade Intel yesterday at all?
No, I own Intel still, though. I sold half of it up at like 51 or 52. 51, I think, and then I had the dump. I obviously should have reloaded because holy macro, what a tape on that yesterday. So gets the rep. Tell us the story here.
Yeah, I was telling Joel, yesterday at the afternoon show, we haven't really seen a ton of hedge fund activism this year. We saw
we're all doing SPACs.
Elliott with AT&T, right? Or no, we saw someone with Disney, right? But yeah, I haven't seen a ton. So basically just a hedge fund down low saying, hey, Intel, get your act together. If you have to, spin off some assets, but do something to get your stock price up.
And we know when the hedge funds get involved, you see these pops, and that's why Intel ripped yesterday. I'd use yesterday's top 50.66 as a resistance point here now. I don't think this is like a game changer that Dan Loeb's getting involved. I don't think this is just ripping up to $55, $56 anytime soon. There's value here. It's why I was in it down at 45. Do you get a shot back down there, 46, 47? Maybe. If it gets up to 51, 52, I might dump it all and then try to reload at 45, 46. It's been a pretty good, support level, 45, 46. And it's come
for
down
a
there.
long time.
Oh, and it's come down there a lot of times. It keeps giving another chance. So it seems like this is one, you can go back 2 years on the chart and you can just see how many times. Yep. 1, 2, 3, 4, 5. 5 times have come back down to this level after being significantly higher than that. So it's like a magnet.
More than that if you go back. More if you go back to 18.
Really? Yeah. Look at this going back to 20. I only went to 2019. You're right. Going back to 2018. So It's been the level to buy. And obviously prices higher have been the level to sell. So, maybe we keep playing that until it doesn't work anymore. So I think Intel gets over 50. I think I might dump the rest of it. And then it pulls back down to the 45, 46. I reload and keep playing it till it doesn't work anymore.
That number you're referencing, that yesterday's high was 50.67. Your high on the 18th, 50.68. So it repelled off that level that drew the line across there yesterday. So, and it backed. I mean, now you're $1.40, $1.30 off that. But got the pop, and he said, spinning off unprofitable acquisitions. I could think of the Mobileye one. What? Wonder what other ones he's referring to. I can't remember all the
Mobileye, I think, is the darling. That was the reason I got talked into buying it.
You still don't hear about anything about it though. With all the, I
think they're going to be a player though. In EV, I think they're going to be a player. So I'm not totally against owning Intel long term too. I'm just, I like it from the trade. If you can grab 5 points, grab 5 points, grab 5 points. Maybe it's a better way to go about it than to sit around and, maybe eventually you could do it the easy way. Maybe eventually it's a $60 stock. I could see it being a $60 stock again. I think Intel, obviously AMD, NVIDIA, we know have eaten their lunch, but I think that with the Mobileye assets and, obviously the chips involved, I think they're still going to be a player in EV as well.
And I'm just looking at this on like a relative performance. I mean, okay, so you ended 19 at right around $60, and then you got to almost 70, and now you're back at 50. So, maybe it will pick up the slack in 2021, but from a tech stock in this market. I mean, definitely.
Oh, there's been a
Horrible.
lot of those.
Yeah.
The Cisco, really the
Yeah.
Oracle, and I know Oracle was giving some love from Niles yesterday, and that's why it's probably trading up a little bit there too. I mean, all of these have been major.
Cisco's made a little
underperformers.
comeback here.
But really put it in perspective, and we get these rallies, we get these dips. It's gone. The
Gone
Qs are
nowhere.
straight up over the last 5 years, and Cisco's really gone nowhere since 2018, and obviously still significantly off its $80 high from 1999. So it's been a horrible long-term investment, CSCO.
All right. What about some of these stocks that maybe look a little tired here? Because sometimes, at least once a day on the afternoon show, Joel will pull up a chart and he says, "Oh, this one just looks tired." Right? Yesterday, who did you say it was yesterday? I think it was.
I put it in there too.
At the trade desk. At least
I
once.
even put the date on it too. Anybody around from the afternoon?
Let's talk
that?
the trade desk. I'll take over here because you've got early profit taking in some of these leaders here, and what happens in January, and people who've just started in the markets may not be familiar with January seasonality. What typically happens the first week of January is you see your leaders become laggards and your laggards become leaders. And that is because of tax implications. Because what is happening in December, late December, is people are selling all their garbage at losses. I did the same thing. So they can obviously, minimize their tax bill. And they're, and obviously you're still seeing, some of the leaders get bought, window dressing might be happening. But what happens January 1st is obviously that trade can come off, because if you're sitting on a lot of gains, and like I am doing the same thing, I'm sitting on some major gains. I was like, I don't want to sell December 28th when I could turn around and sell January 1st and pay the tax next year. So you typically see a reversal happen just from tax implications, where the leaders become laggards and the laggards become leaders. Well, they've pulled the rug out early from that trade, maybe anticipatory traders anticipating that, and they've started doing that 2 days ago. So you're now seeing stocks like the trade desk come off. You're starting to see stocks like Shopify come off. And you're starting to see some of the stocks that really haven't performed that well in 2020 start to show some life here again. So natural rotation, even some of the mega caps have underperformed, and some of them, obviously yesterday we had a sell-off and everything, but some of them were showing some life as well. So I think that trade continues into January. So that's why I don't want to come in the trade desk. It's like I didn't want to come in yesterday. I don't want to come in right now here knowing the January effect is potentially there. So there's a lot of people still sitting on a lot of gains in the trade desk, a lot of people sitting on a lot of gains in Shopify, a lot of people sitting a lot of gains in some of these SPACs. So I think you could see some profit taking in the first week of January, and maybe a strike, after you get that profit taking wave. Mitch talked about waves. I completely agree with that. Get, a little bit of that down wave here from some of that natural profit taking of people who are holding on to the gains until 2021, so they don't have to pay the taxes until 2022. I think that's maybe your opportunity to get into some of these names. I think if you're coming in here yesterday or today, I think you're a little bit early still.
Here's a good question from Luke Jacoby in the chat.
Luke, what's up?
As far as tax loss harvesting for ETFs, couldn't you theoretically just sell an ETF that you're up big in and buy a similar?
Sure.
Yeah, I mean, a loss is a loss is a loss, right?
Yeah, that's ways to, you can hedge yourself. And if you don't want to pay the tax bill and you're nervous about it going through, you can hedge yourself. And you should have been doing that, I guess, 3 days ago. You can hedge yourself. So there's so many ETFs that are similar, or even some companies. I mean, a lot of this stuff moves together, so you can go and short something else, hedge yourself out to get ahead of that trade a little bit, and it would have worked well. Hindsight Capital's 2020. We didn't know they were going to pull the rug out earlier, 2 days ago. So, typically what I'm saying is those stocks show weakness though in January. So they're showing it a little bit early here. So yeah, it would have been awesome to obviously be short a bunch of these stocks 2 days ago, but I don't know if anybody knew they were going to pull the rug out 2 days early from it.
Spencer, was it Neo that we were talking about?
Where you said the
well, we were talking about, I don't know if I wrote tired on it, but I'm just looking at the stocks that we talked about yesterday. And man,
I think it was that one.
this is about as, folks, take a picture of this. This is about as much drawing as you're going to get out of this old man here. You guys ready?
Yeah, show it to me.
Look at this.
What do you got?
Neo.
Holy mackerel, line central.
Yes.
He did it mostly on the first try, I think.
Yep. Yep. Look at that. You got your 50. This one, I don't know.
What do all those lines mean? Tell me about
50%
these lines.
retracement. Low of
Yeah.
the move, 38.31. All-time high, 57.50. Mid-range of that move, 48.
Yeah.
Right? You're struggling at 48. And then this is an okay trend line from the top to that other top. So Spencer want to get a wedge out of this. I guess if you want to, I don't know. I like to draw it off at least three. But I'd say if this Neo doesn't get back over 48, hold 48, I think you can test that 38 in this thing. This looks a little, it had the big decline, snap back rally, decline again, snap back rally. Now it's going back down again. A lot of people sitting in a lot of profits, working on a monthly red candle. You haven't had one of those in a long time. So usually when you get one monthly, sometimes it's you might get two in a row. So keeping an eye on NIO.
Closed strong yesterday.
It did.
It did. We had the sell off in the morning, and then that turned around, and some of these names got some money put into them throughout the day by the dippers emerging here again. Again, this is one that could suffer from the January effect that I was just speaking of. This is a stock that a lot of people are up a lot of money in. They're probably sitting there licking their chops, and I want to book these gains, but I don't want to do it till January 1st. So I don't pay the tax. And obviously that depends on the country you live in too, because some guy would settle date, somebody go by trade date. I think I can't get interested in Neo until it gets above 50. 50 is the line in the sand. So I would just say guilty until proven innocent here. If this thing can shrug off potential sellers in January, get above 50, start to hold that, then I get interested in it. But right now, it's kind of a little bit in the middle of nowhere. I can see the trend lines you're drawing, Joel. I would say above 50, it's a buy. Below 40, Katie bar the door. That's where you've got that line there. You were at 38.18, but I'll just say $40. 40 to 50 is the range. It's trading the range, and if it breaks out from the 50, maybe you're getting long. If it goes down below the 40, maybe you're getting short.
Great point though from Sid Steed. And Dennis, I know you love your pre-event catalyst here.
Yes.
Neo Day, which is like their annual.
Oh, good.
Day is January 9th.
That's important to know too. And I always say you want to own these things a couple days before these events. So maybe you get a scenario, and maybe you get a scenario where some profit taking comes in early January into this stock, and they hit it because people have been sitting on a lot of gains and waiting until 2021 to take them. And maybe you buy it like the 6th or the 7th before Neo Day on some weakness, if that sets up like that. If it doesn't set up, it's ripping, all the way up while you miss the trade then. But, I would look at a dip opportunity to buy in this a couple days before that event. January 7th.
This is the most, you had since November, this has been the most, you had indecisive. You had this little choppiness here and then the run up to the all-time high, but you're right, in a range. It could just grind in here too to that event day too. It doesn't necessarily have to bust out over 50 or break down under 40 consolidation periods, right?
I want to give you another chart here. Its brother-in-law, XPEV, sets up very interesting here, Joel. And I know you're going to like this one a little bit better because you put in a nice double bottom yesterday in XPEV, almost perfectly, 37.50,
there you go.
37.60. Yeah. The stock closed high. It's getting follow through here today. This stock is significantly off of its highs. Unlike Neo, which is just a little bit off its highs, this one's significantly off its highs. I kind of like this. I don't know if I want to buy it, when it's just really $6 basically since yesterday. But, you get a little pullback in this thing. I would lean on that double bottom there at 37.50 and 37.60. So it does set up not bad, a little bit better. I like this one better, even though you're in an ugly downtrend. I like the candle from yesterday.
Yeah, and it's nice because it's right in the area right here of these two other lows in November. Didn't quite get to this one, but if you were just concentrating on your daily lows, maybe you threw something out there at 37.50 and hope for the best. And, because you obviously, if we could see these daily lows back here, machines and other savvy traders are looking at them too. So what was the low? Yeah, low from yesterday was, or actually double bottom. Nice. 37.50, 37.60. And on the upside, you took out, this might be the one where if you want to buy a little bit of a pullback down to see if it comes into yesterday's range, that would be like 41.80, 41.90, and hope it doesn't go red on you at 41.55.
All right, we've got our guest here. Actually, I believe our final guest of the year, Gene Munster, founding partner at Loup Ventures. Gene, good morning.
Good morning.
How's it been for you this past since you last spoke?
It's happy to report everyone is healthy. Some of the themes that we've been behind have been moving in the right direction. I share everyone's view about the hopes about next year. And we're kind of doing what we do every time at this year, which is make some expectations about where 2021 is going to play out.
Exactly. And we'll go to the charts here. And I remember one thing that really stood out in my mind last year was you talked about, Apple's valuation and the multiple that it was trading at. And it really wasn't getting any respect. So now here it has got some respect. The multiples bumped up, but this is your pick for the top Fang stock for 2021. Tell us what you're looking at, what's behind that that prediction.
Well, it was the year where Apple got credit, essentially trading in line with where Facebook and Google have been trading. But really the substance of why we're behind this next year is three big themes. And first is the acceleration of this digital transformation, which means more people are going to be working and learning from home, working remote. It's kind of work from anywhere. This is going to have a positive impact on the iPad and the Mac business. It's about 25% of total sales. The street's generally looking forward to grow at around 10% next year. We think that there's upside to those numbers. More recently, those businesses grew at 30%. It's come off of a small base, a small flattish before the pandemic. But that's point number one. Mac and iPad business related to acceleration of digital transformation. Apple's the only company that can do this real well. I guess a trivia question for your listeners or viewers, what is another company that kind of has the full suite of products? The answer is Samsung and Google, but none of them can really bring it all together with the support, the service, the reliability of the products. The second is enthusiasm around 5G. We think that's going to grow in the back half of the year and really launch a 2 to 3 year iPhone upgrade cycle. And the third is, I guess when you put that together, we think that point number two about some of the lift with the iPhone in the back half of the year, we think that that should start to provide some upside to the 2022 numbers. So essentially, we're expecting throughout 2021 estimates for 2022 to move higher. The street's looking for 15% revenue growth for next year and 5% for 2022. I think the real number for 2022 is closer to 10 or better. So that's the second point. And third, Joel, you mentioned the multiple expansion piece. A big part of our thesis in 2020 around Apple was multiple expansion, but there's a case that can continue. And I think there are two meaningful opportunities that the company's been starting to pursue that the stock has not gotten much credit for. One is this idea of adding more hardware as a subscription. They do it with the iPhone today, but they can do that with Mac and iPad and eventually get to a full bundle where you pay Apple a once a month fee for everything you need. And the second piece is, of course, what's going on, what they're doing in Apple Car and automotive. It's a massive addressable market. And if investors start to get more wind of their plans there, that should expand the multiple. So I think you put it together, you look at the rest of Fang, the choice was pretty clear to us that Apple's going to be the top performer.
Let's go with number two.
Number two is Amazon. And I think that the simple takeaway is that e-commerce is still a small part of what we're doing. Before the pandemic, it was, call it 10, 12% of what people are buying. It peaked in the summer at 17%. It's drifted back to 13%. It is remarkable. Keep in mind that number eventually doesn't go to 100%. We'll still buy, 25 years from now, we'll still buy things in stores. Maybe it caps off at 60%, but we still haven't hit that S part of the curve in terms of e-commerce adoption. It seems tone deaf to suggest that, but that is in fact the case. I was recently, I think the other piece about Amazon is just the logistics piece, and just to kind of frame it in, after the holiday, I recently went to return some items. I went to a UPS store to return some Amazon items. it was a smaller store, but you could hardly even step foot in the store. This was in the afternoon, just the day after Christmas. You could hardly step foot in the store because the store was floor to ceiling with boxes with people returning things. And the takeaway there is this logistics piece. And we saw it in the US postal system. We saw UPS and FedEx have a difficult time keeping up. This is the substance of what will differentiate Amazon longer term. The valuation is high, but I think that when you look at the opportunity for them to use logistics to continue to move e-commerce adoption higher, that the stock will continue. And then we have, when we think about the Fang stocks, we kind of have a line there. There's a bubble stock with Google, hard to determine where it's going to play out. And then below the line, of course, we would see Facebook and Netflix as ones that would, I'm not saying they're not, I think that they can be up in 2021, but I think that they will underperform the rest of, they'll underperform Apple and Amazon.
Gene, before we continue with your predictions for the year, I just want to ask you, on a scale of totally normal to completely irrational bubble, how rational do you think these tech stocks are behaving right now?
It depends on I think the type of tech stock. I think some of the small cap tech stocks that have seen these 2-3x moves more recently, I would consider that unacceptable exuberance. I think that would be an 8, 9, or a 10. I think that something like Apple, given its valuation, its cash that it can generate, the opportunity ahead of it, I don't consider that exuberant at all. I mean, but let's just quickly put some context around it. Is it's a $2+ trillion company today. They could get into in the next 5 years into a $2 trillion market. I mean, that's justification for a higher multiple. So I think some of the big ones, surprisingly, I don't think have had, even though their performance won't last, I think that they won't. It begs the question of how does Tesla fit in this? It's a bigger company that has had a vertical rise. And I think that when we've been positive on Tesla, constructive on it, continue to believe longer term to be constructive on it. If our thesis about Apple getting more credit for what they're doing in auto is correct, I think it's safe to fill in that 2021, maybe a year where investors get a little bit more nervous about Tesla in the near term. And so that is a factor. I'm not trying to have it both ways here, but I think that someone trading, a stock like Tesla for the next 3 to 6 to 12 months, that is, I think, a dangerous sport. I think that if you want to own it for the long haul, I still am optimistic about that. But I think that you're going to see more fluctuations in Tesla stock in 2021.
Do you think Tesla would be more likely to spend the next 3 to 6 months doing a whole lot of nothing, just going sideways, or doing what it did for these past couple of years, which is going up and then going down and then going up and then staying in that range?
I think that if broader 2021, I think it's up slightly. I think that, the numbers, we haven't seen the numbers for the December quarter. I think that they're going to be positive in terms of the deliveries. I think they're going to hit that kind of target that they had of near 500,000 vehicles for the year. So I think that is a directional positive. But I think beyond them, the numbers that they're going to put out the first week in January around the deliverables, I think that will be a positive catalyst for the stock. I think you would get into a period where there's just not a lot of big news coming out of the company. We do have a prediction that by the end of the year, we think it's late in the year, that they're going to start a chaperoned robo-taxi fleet. It probably needs a little bit of explanation what we're saying there. Whoa. But that to us would be a measurable catalyst at the end of the year. But kind of between the early numbers to the end of the year, one other thing to keep in mind too is Tesla's got more demand than they can keep up with. And that's important because you can't have this unlimited upside in deliveries over the next 3-4 quarters, because you can have upside, but it is just hard for them to produce enough cars to meet demand. And so I think that you kind of, the middle part of the year, there's not a lot of big catalysts. The back half of the year, you get more talk about Cybertruck and what's going on in the robotaxi fleet. And I think that starts to pay the path for a company that's greater than $600 billion in value.
Gene, what would that mean for Uber and Lyft if you're jumping in and Tesla's going to get into robo-taxi? I automatically think, competition for Uber and Lyft. What are your thoughts there?
Long term, it's going to be a rough road for Uber and Lyft, not just because of what Tesla's doing, but because I think Apple has aspirations beyond Apple Car, Apple Fleet. and that's just based on kind of knowing people who have been in and around the conversation on Apple. And so I think that the reason why I'm not pulling some sort of an alarm with Lyft and Uber, they've had about as bad a luck as you can have over the last year. And not undoubtedly, I hope that things progress more to normalcy, which you just get some really easy comps in 2021. So I think that those will do well in the near term. And when I think about a robo taxi fleet with Tesla, or when Apple gets in the market, maybe it's 2025, 26, it's still years away. The Tesla fleet is going to be minuscule. I mean, we're talking probably about tens of thousands of cars at most. And so initially, so I think to answer your question is, long-term, Lyft and Uber got a real problem, and they have to figure out a way to shift their human-driven network to autonomy and compete with Apple and Tesla and Google.
We're on the line with Gene Munster of Loup Ventures, longtime follower of tech stocks. What about competition for Tesla? I mean, I don't think you have time to follow all these SPACs and all these EVs that are coming out. In order to maintain market share, what about the big boys? GM and Ford. Where do you come out on competition coming out for Tesla? Or have they just established such a lead here that it's going to be virtually impossible for other people to overcome?
So we're in the camp that their lead's going to diminish meaningfully, but the acceleration in EVs will more than offset that, which will create a much bigger business. So just to kind of quickly put it in perspective, is in the US, they have about 80% EV market share. In Europe, it's probably closer to 30%. And then China, it's probably 20%, something like that. I think that if you put it together, I think in aggregate, all of those market shares will decline slightly. China will probably go up, but US will decline. And I think that if you fast forward 10 years from now, my best guess is Tesla has 20 or 25% of the car market share. That is more than what GM is today. I think it's at 18%. So competition is going to come. I think that what else is going to come, the bigger wave that's going to come, is electrification and autonomy. And so I think that it's something that I'm not as concerned about when I think about Tesla's longer term opportunity, in part because being electric isn't really what is going to be the defining moment around the future transportation. Autonomy is. And I do believe that the company has a lead there. We can talk about that relative to other car companies. So to finish your question, Joel, is where do traditional auto companies play in all this? I think they're in a tight spot. I think that they can find a way out. I think like Volkswagen is particularly well positioned. They've done well in Europe with EVs, but I think that it is such a complicated topic for traditional auto. And let me just quickly frame in one example, is that they have built businesses around these incredible labor forces that they are indebted to, and not just emotionally indebted to, but financially indebted to with some of their pensions. On top of that, they have businesses that benefit from parts networks that are probably going to diminish in an electric and autonomy world. And so it gets to be pretty complicated. And to put it fast forward to the conclusion is, I think that many of these big auto companies, they'll be around, but they're going to be restructured and look very different 10 years from now.
With the expanded Fang, any comments on Microsoft just hanging out here near all-time highs?
It is. I don't have a lot to add beyond that. I do think that good company, but I think there's better places to be.
Look at that. I'm just looking at this technically, man. You got 1, 2, 3. You got 5 monthly tops in the same area, so that thing needs to bust through. Let's move on to another stock that I've been following with you for a couple years, and Livent Corp, LTHM. I mean, that is a nice move here off that March low, really at an all-time high here. Is it time to take a look at this and say, hey, this has been a nice run, or you're looking for possible continued upside in LTHM?
I think it's the latter. It's just to stress each of those words are important, possible, and continued upside. The bottom line is that they're one of the more reliable providers of lithium. When you think about all that has gone on and some of these SPACs and future of battery technology and what Tesla's talking about and Apple's talking about, they typically have a basis in lithium. And so it is an arms supplier. It is a way to play electrification, not just of cars, but of pretty much anything. And there's lithium batteries in your phones. And so I think that it's not a very exciting company to own. They mine lithium. And so, but I think that that is a good long-term play just related to being an arms supplier to the arms race.
Now, one that you did mention to me when it was in single digits, or to our listening audience, and I didn't pull the trigger, was Jemiah. And holy mackerel, what a move over the last 3 months, knocking on the door of an all-time high. Just talk about the prospects for further upside or prospects for potential downside here in Jemiah.
So they are the largest e-commerce company in Africa, and most of their business is in Nigeria. And so, the comparables would be like a Mercado Libre or JD.com, Alibaba, Amazon, things like that. These just massive companies. And I think that, when it was in the single digits, it just didn't pass the basic sniff test. It was a $200-300 million market cap. And the largest e-commerce player. Now I think it's closer to a $3 billion market cap, and you have to make some adjustments for GDP per person and look at what the opportunity is there. I think this is it has some similarities to Tesla. I think that if you are owning this for the next 3 weeks, I would not recommend that. I think that just to own it, given like the December quarter, for example, it just is. It's just putting too much into what is still, they're working through building their infrastructure. They've done a great job of navigating the pandemic in Africa. However, it just is, it's come up a lot. I think of this as be opportunistic. It's a great company to own longer term. I continue to be optimistic that this can be a much bigger than a $3 billion company long term. But just given what we've seen in some of these moves, who knows? I mean, this could be down 25% on a somewhat positive earnings. So I would take the approach to be more strategic, wait for a pullback.
Gene, looking through your predictions for this year, I know there's no way you could have seen this. How did you not see a pandemic coming is what I want to know.
I missed it.
What jumped out to you about what you got right or wrong this year?
I think if we go down the list, I think we got right the piece, as Joel talked about earlier, the multiple expansion on Apple. It was still to be determined. We had Apple as our top pick and Fang pick in 2020, and it's going to come down to the last minute of trading. It is pretty much neck and neck with Amazon right now. Unclear of, but either way, regardless of how it plays out, both those stocks are going to be up 75% plus for the year. So I think what we got right, at least with Apple, was the multiple expansion piece, that Rodney Dangerfield effect. I think we'll get the Tesla piece right, just in how many deliveries they've had. And I think what the insight that was maybe correct was around just electrification and the world being more ready for electric cars. I think the things that we've gotten wrong is we thought direct listings was going to be more important, more impactful this year. Turned out to be wrong. It wasn't direct listings, it was SPACs. And, we don't hear much about direct listings. We hear a lot about SPACs. So we missed that one.
This could be a conversation for another day, but I think maybe you could have been a year early on the direct listing train, because I think, the NYSE just changed the rules, right? Or the SEC just changed the rules. So we could see a lot more direct listings coming up, but I guess that could be a conversation for another day. Gene Munster is a founding partner at Loup Ventures, does fantastic research on tech. Let's Loop with a ULOUP. Gene, as always,
Thanks, Gene. We really appreciate your time.
Talk to you again in 2021.
Over and out. Thank you, everybody.
All righty. 8:55. Hit that like button if you thought Gene gave you some good information, and if you didn't hit the like button anyway, that would be appreciated. Dennis, what are you seeing out there? Anything?
Yeah, it's quiet. I mean, we're starting to leak a little bit here. Obviously, market a little spooked yesterday where you had a pretty significant sell-off throughout the day. You get a snapback rally here overnight, and now you have some profit takers, and not even that, just people who are like, okay, well, I missed it yesterday, but I'm going to get out yesterday. It was an ugly tape yesterday, quietly ugly, because there was a lot of stocks that really got hit. And, the day before on some of the little Momo names was ugly too. So you're sitting here, it's quiet, but at the same time, there's people who are sitting on gains who are a little bit nervous too. And they're like, okay, do I ring the register here early? And so I think that's just where we stand. It's all a matter of, timing here now. I do believe we're going to see some weakness here in early January, and are people going to get ahead of that or not? So that seasonality would say that anyways. Market doesn't have to do anything, but I'm playing right now the fact that this market's a little bit nervous, and what's the catalyst to really take us up here in the next couple of weeks? You're sitting with a lot of people sitting with a lot of gains, looking to maybe take some of those profits, and what's the catalyst to drive us higher in the next week? We know the vaccine's coming. I struggle to see the overall catalyst that's going to make this market just fly up January 2nd and January 3rd. I think you see some profit taking, get some dips, and then the buy the dip comes in, and maybe you start the next wave up, like Mitch was saying with waves. So that's why I'm cautious right now, and I'd be looking, into rallies to lighten up a little bit here.
Let's go to some tickers from our chat. Someone dropped in Aptiv, which we haven't discussed for a long time, I think, on this show.
APTV.
APTV.
Trending up. Lots of people sitting on a lot of gains here. The candle yesterday wasn't great. You got double top in the 130 area. I'd say under 130, guilty until proven innocent. Get back over 130, then it gets interesting here again. I don't know if there's news on it. Today it hasn't had no trades here this morning, really. So
that's
130
Delphi,
line in the sand.
Delphi Automotive, huh? Wow.
This is the old Delphi, is it?
Yeah.
Is that what this is?
Wow. I think that I got ahead on some of the technology for EVs.
Think about it though, Joel. This stock was a $29 stock when it crashed back in March.
I know.
And, obviously 50, 60, 70, a lot of people bought it at 29. But, lots of people bought it 50, 60, and this thing's $120. This is a stock that is a candidate for that effect, that, tax, holding off, and then, new year comes in. We're going to harvest some of these gains that first week. So it's a stock I would not want to own January the 2nd.
It's hanging up here. I mean, you could use, the 130, definitely needs to get above 130, but I'm looking at these lows, just been sleepy. I'll call it matching lows at 127.06. I mean, if you're looking to hit WAP on a little bit of weakness, there's matching lows from what's today, Wednesday. So from last Thursday, boy, these days off mess me up. From last Thursday and Tuesday, matching lows. Keep an eye on 127.06 if you're looking for any kind of follow through on the downside. But things are pretty quiet here. S&Ps did slip under 37.30. We're still up 9.5 handles on the session. Don't put a huge emphasis on, the mid-range on the day. It's something I'd like to keep an eye on. But when it coincides with your all-time closing high at 27.50, that's going to be my focus point in early trading this morning.
All right, we got about a minute left.
Two more tickers. Let's go.
Two more.
15 seconds. 15 seconds.
This is about the hot stock of the day, which is going to be Net Element at NETE. The headline here is that looks like the company that they're merging with got a purchase order for 1,500 electric vehicles, and that
I know nothing about this company. I can't even give commentary on that. Up 40%.
I told you it's the high flyer of the day.
Yeah, so people again, and 4.3 million. This is where people want to trade. They don't want to make 20% a year. They want to make 20% a day. So they jump into stuff. This stuff's hard to trade. So this is not my bread and butter. If you're looking up for the quick money, you're listening to the wrong show. I'm not trying to give you the gainer that's, go listen to a small cap show or listen to something else. But I'm not trying to come in here and give you what's moving 20%, how you can make a quick 20% on your money overnight. I'm trying to teach you guys how to trade for a living. I've done it for 21 years. But the reason I've survived for 21 years is that I don't trade these stocks. I don't know how many questions I get, but I would say 8 out of 10 of the questions that come to me via, different sources, Twitter, email, chat, it's about high flying movers. People, are interested in these ones. They want to get rich fast. And I'll tell you, you were going to hear the stories of, oh, this person made so much money trading this, but you won't hear any of the stories about the person who bought this stock back in July at $20 and watched it go to $6. Yes, it came back, and can say all stocks come back, but they don't in some cases. So this is the type of stock that I do not trade. I believe the majority of traders who come in these stocks lose money. So I'm not interested in even giving technical analysis on a stock like this.
All right, well, let's end it on a positive note. We'll do one. Let's do one that you do trade, or at least have traded. Adobe.
Adobe, great stock. It's got relationships. It's a cloud stock, so I can look at other, indicators. And this is a stock that's sleepy and quiet and boring. People, why do you want to trade Adobe? It moves around $1 or $2 a day. Because I lose 20% of my money.
It moves around more than $1 or $2 a day.
This has just been sitting here. It's got a nice cup and handle pattern going. You can look, it's had a pretty good year. Everything has had a pretty good year, but there's not people sitting on 100% gains on Adobe. So the January effect doesn't affect this one as much. Again, I'm not loading up on anything because I think we're going to show weakness January 2nd, January 3rd, January 4th. I'm predicting on this show right now that it's going to get sloppy in the first week of January. Maybe it's not January 2nd, but it might be January 3rd. There's going to be some profit taking that comes in some of these names. Adobe is not going to be one of those. So it's one that I would look to buy into the January weakness if we get some. So I would put it on the radar. I don't want to buy anything right now, even though the chart looks pretty good. I don't want to buy stocks right now. I'm more inclined to sell stocks right now because I think weakness is coming in the first week of January.
I think this one, someone's just working out of a large piece. I'm just going to call it the 505 area. Just looking at the last 1, 2, 3, 4, 5, 6 sessions. So someone's working out of a piece, and it kind of reminds me, not exactly, but this trade desk chart. Someone was wiggling out here at 950. This high price stock like this, it takes, if you got a big position, it takes a long time to wiggle out of it. So they mopped up the 950 guy or gal or combination. They took it to 970 and that was a bad sale. Well, it ain't such a bad sale right now. So I would just keep an eye. My focus for Adobe 505, see if you can clear that, but clear resistance.
You got one more before the end?
We can do one more too. All right. Let's do Snowflake.
Go to a tough one.
Weakness, the one thing about this stock is there's not a lot of people sitting with a lot of gains. I mean, this came out IPO. It's basically at the IPO price. It's a lot of people sitting with some losses here last few days. So January effect doesn't affect this stock as much, believe it or not, because it's not your typical, stock that everybody's up 300-400% in. Most people are some people that are up in this, but not a lot. So it's this valuation. It's hard to wrap your head around something that trades 100 times sales. Great company. People say, oh yeah, Warren Buffett's in. Yeah, but he got in, before the IPO. Yeah, he got in, before the IPO. So obviously that was free money for him. 302, it sits here, it's hanging out, wants some direction. Again, I think overall weakness is coming to the market. Do you have a trade if it gets back down to the 250 area? Probably bounces at the 250 area again. But I'm not coming in here saying this 300 holds because I'm nervous about the overall market right now for the first week.
Yeah, I mean, to me, right now with the downward momentum, it did have an okay day yesterday, but I think if you're trying to stab it here, I think you're risking down to 290. There's not a lot on the daily charts between yesterday's low and then a pair of lows at 288, 289. So I know, Dennis, you're looking at more of that 250 area, but I see a pair of lows in the same area. It catches my attention.
All right.
Yeah, we're dropping here, Spencer. What are you doing over there?
I didn't do anything. I'm just sitting here. What did I do?
I don't know. Something happened somewhere. Someone said something. But anyways, we just cut through mid-range on the session. Pre-market low. We'll keep an eye on that, 37.1650. But that's it. So no more guests. And Spencer, tell them about tomorrow's show.
Special show tomorrow. We will talk a little bit, about what's moving and what happened today. But tomorrow we're going to do a retrospective on the year. We went back and we tried to listen to as many hours of our own content this year as possible and found a few highlights. So we're going to play some highlights from the year, and we'll do it in a way where we'll play a clip and then we can talk about it a little bit and see if we were right or if we were wrong. We got some Dennis rants. We got some great stuff from our guests. So that'll be tomorrow's show. We will cover if there's any news, we'll talk about it, but really tomorrow will be more of a retrospective, more evergreeny type of show. That being said, I want to remind everyone that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guest today, Gene Munster. Hit that like button in the chat. We're at just under 400. We can get to 400 easy. I know we can. We actually went down when I said that. That was funny. Okay. Thanks to all the likes, all the comments, all the super chats. As always, we appreciate all you listeners. Catch a replay of the show on YouTube or any major podcast platform. Remember, SPAC's Attack is on at 11 a.m. Eastern time. Just go to Benzinga's YouTube channel, youtube.com/Benzinga TV. That's where you'll be able to find that. Joel and I will be back at 3:40 p.m. Eastern time. Until then, everyone have a good rest of your day and good luck in your trades.